Happy Friday, everyone. It is 8:02 a.m. Chicago time, 9:02 Eastern on Friday, the 28th of July, 2017. Last Friday of July. Time flies when you're having fun. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The performance overnight of the market, it is on the It's on the risk averse side. Capital is has been shifting over to safety a little bit. Excuse me. Apologize for that. Um, Crude oil is higher, mainly on fundamentals. Crude oil is up 17 cents, trading at 49.21, 0.37%, followed by the euro, which is the next strongest product here, trading at 117 handle, 117 and a half against the dollar. The euro and gold is trading at $1,269.30, up 2.9 cents, $2.9. And the laggard today is the Euro stocks, followed by the NASDAQ. But overall, the risk assets are looking red today, somewhere in the 22 to 50 basis point range. As far as what else is going on, there was more news from the political system here in the U.S. The Skinner repeal of the Obama health care, or the ACA, had failed. Senator John McCain voted no on the proposal, and it failed by one vote. Also, Japan's inflation matches expectations. And looks like Starbucks is guiding lower this morning. There was a lot in terms of earnings again. A lot of different companies. Amazon came out at 0.4 versus $1.40. Revenues of 38 billion versus 37.2 billion, and so on. I'll let you look at the earnings yourself. But overall, the market is responding in a weak way after yesterday's drop. Japan's jobless rate's 2.8% versus 3%, matching the lowest since June of 1994. The Eurozone July Business Climate Indicator got in at 1.05 versus 1.14. We also have at 7:30 this morning, we got Q2 Advanced GDP Price Index at 1% versus 1.3 missing. Core PCE Q on Q is at 0.9 versus 0.7. The prior GDP price index revised higher up to 2% from 1.9. So that's what we've got that's on deck. As far as what we're looking for coming into today, as I said, there was a ton there. There's a ton there that came across from Europe overnight, and we did get the GDP. What's left today is the 10 o'clock Eastern University of Michigan Confidence Final for July. 93.1 is what's expected, and that pretty much closes out the day. We have Fed Speaker Kashkari speaking at a town hall event at 1:20 p.m. 1:20 p.m. Eastern. Fed Speaker Kashkari. So 10 o'clock and 1:20 p.m. All right, so that's that. Let's have a look at where the markets did their thing yesterday. So yesterday we had a pretty big sell-off. We hit some pretty key levels. I want to look at that with you, show you how the auction works in real life as opposed to what you've seen in the webinar series and all my talks. Yesterday, the expectation was for the market to open out of range, auction up at the sell-off, and then remain inside of the prior two-day range. These are the 2 days I'm talking about. And to form a Gaussian profile again, to consolidate again after putting in new all-time highs again. That that kind of happened, but we didn't push up. We pushed down immediately. Hypo 2 had us pushing down immediately, consolidating, and then making a run for the high later in the afternoon once it's done exhausting the sellers. That didn't happen either. So neither one of these, if there was one that was close, it is Hypo 1 with the sell-off. But neither one of these worked out yesterday. Here's what we actually got. Let's go to the Renko. Pretty dead trade in the morning. And then the market started selling off from 78. We basically broke down immediately. We had a quick test of the mid up here for a continuation trade. Then we pushed to the other side, consolidated for a bit. Then we broke below mid again, a retest of mid right there, and then we started to get this sell-off. The sell-off first banged its head against the 69 even, which is the naked point of control underneath from the 24th. It pushed through our gap zone, consolidated inside of the gap zone for a little bit, and then we saw some more weakness, which took us down to the naked point of control from the 17th and the mid of the gap zone from the 19th. And then we ultimately pushed down into the key figure here, the key higher time frame figure is 57.50, and you can see it pushed through by 2 ticks before finally getting a key rotation up. This was a large rotation, I think it's 7 points or so, 7-8 points from the low. And that basically showed us that buyers are stepping in right at the point of control. Here's what it looks like in a bigger time frame. Okay. So this is why we draw these composites, right? This is the composite that we started to drive into. The composite point of control is listed right here, 24.57.50, which is also this black line right there. The market dropped from the 78 area directly into that point of control, so it tested this very, very well-developed balance zone here, tested through, and then with a bounce, the bounce could give us one of two things. It could give us consolidation and then continuation to continue this move down, so we'd flag and then continue down, or consolidation and then corrective, which is what we did here. We pushed down, up, higher low right there, which is the tradition now, higher low, and then a push back into the 71 gap area before the market closed. So the market's been buying every dip, and yesterday's was no different. We have a nice taper on the profile from yesterday. It's definitely unusual. We're not used to seeing such movement on an intraday period. It's tough to switch gears real quick and get into that. Because we've tested so far down, I will have to extend this profile out right there and start having it build to show us where the key areas are. We have a double distribution composite now, right there, with the point of control at 69, which is just above our current price. The market sold off from where it was yesterday into the Asian session and the European session. So we have 69 as the point of control above, but we also have some pretty decent resistance above there. Seeing this area here as key resistance where we ended up testing yesterday. Couldn't break through, but we have pretty solid resistance through there, a low volume node. So you can see that it carries over from here all the way through here. And that's the area that I'm looking to sell against on a retest. If we get back up there with a tight stop, again, if we get back up there, the expectation today, though, is that we're likely to run into resistance ahead of it and then push down and test down into 58 and then hold steady into the close into the weekend. Let's take a look at what we've got for the overnight. There's the overnight. a long liquidation profile, a B-shaped profile. In other words, see that B forming right there. B-shaped profile. The market moves very swiftly down, finds its low, consolidates, and then holds steady throughout the session, giving us what we call long liquidation. And that's basically the market just making a stem or moving away from what's anticipated to be too high a price and then balancing on the lower end and giving us a clear high volume node down here. The volume is outstanding. This morning it's about 60,000, 70,000 higher, actually almost 80,000 higher than normal, about 30 some odd percent higher than what we would normally expect. The delta is negative. The inventory is on the sell side this morning, so looking for the market to rebalance here. I'm looking for this to look something like this as it tries to push higher, and then I'm looking for it to consolidate and start to test lower yet again. So the overnight session is telling us that sellers were dominant and they're holding prices below, but we're likely to rebalance this as we open up. And finally, our expectation for today. Let's clean this up. Our expectation for today. Before I say that, before I give you that, I would really like you to hit the like button today. It is like Friday, okay? It is like Friday. So take a moment to hit the like button before you head out. It helps with the rating on the channel, and it helps me get attention when something's wrong with the feed. As many of you have witnessed, every once in a while the feed does not work very well on YouTube, the live stream. And it helps me get a response. This morning we're opening in range, in value. There's really no value from yesterday. We have a triple distribution profile right there. Excuse me one second. We have a triple distribution profile. Key areas, 73, right where we are here at 68, 69. So this morning, the expectation is for an open auction in range. I'm looking for the market to rebalance, push back up into that 69 point of control, try to push through, and then run into resistance. I'm looking for a lower high, and then for it to have an impulse down to retest down into the range. And I'm looking for 58 this morning before it starts to rebalance. So I'm looking for a profile that looks a bit like a double distribution, but not so pronounced. So this could look like something like, you know, one of these types of distributions where it is a double distribution, but it looks more like a Gaussian curve. So that's the primary hypothesis for it to drift up. I'm expecting a drift up. This market loves to buy dips. I'm looking for a drift up to start failing into the 71 to 73 area for a sell opportunity. The sell opportunity, I'm looking for it to just yield, you know, just 3-4 points. That's it. That's what I'm looking for. Remember, I'm not here to catch the low and the high, and I'm not here to promise you that you can do the same. I have no interest in that. I'm here to capture 2 to 3 points every once in a while, 5 to 6 points on a runner, to do it on size, meaning a lot of contracts, and to do it more than once a day. I'm not interested in the one trade of the day that catches the bottom and then gets out at the top, or shorts the top and gets out at the bottom. That's not what I'm here for. I'm here to take multiple nibbles to keep my risk low as possible, relatively low, and to be in and out of the market. That's how I trade. That's how I've traded for 17 years, and even at a micro scale. So that's what I'm looking for. I'm looking for this big move down, this failure, to ride the failure down, take my 2 points off, take my risk off at 2 points, let it ride for 3 or 4 or more points, and then manage risk as the market develops, okay? Secondary hypothesis is, of course, the opposite, open auction out of range. a push down into um, the 62, and then the 59 area. I'm looking to test this low, the closing swing low there. And then if that happens and we get an impulse up, then I'm off of the 73, 71, 73 sell side. Those become scaling areas. And then the market's likely to continue to push and resume new highs and start working towards 80.50. It'll likely finish somewhere in the middle. For this, I'm looking for a profile that looks something like that, for it to pause in the afternoon and give us a taper at the bottom. So I'm looking for a market to drift down, impulse up, catch the continuation. This is the move. The second move is the one we're looking to catch, and then the third move is the one we're looking to let runners run on, and that would be hypo 2. Okay, not expecting an open drive in either direction this morning. We did dissipate a lot of the volume that went into this consolidation, these strong consolidation, tight consolidation zones. So you can see here, we kept having this bunch, these 2 days bunching together, these 2 days bunching together, and then this trend day with a consolidation day. That the energy that was accumulated from this has likely been dissipated in the sell-off. So I expect a slower, more steady trade this morning. Okay, again, please hit the like button. It is Friday. Don't get excessively emotional. Don't try to control your emotions. Just be aware of them. Don't get excessively emotional and then try to engage the market from an emotional point of view. Good luck, and I'll catch you on Monday morning. I'll be back in Chicago on Monday, and everything will be back to normal then. Good luck. Take care.